All right, welcome to this explainer. Look, if you're sitting on an executive board right now, managing institutional capital, or directing global strategy, the map you're currently using to chart the future of the global economy might actually be pointing you in the wrong direction. We're going to challenge some deeply held geographic biases today. This explainer is a definitive, data-driven executive briefing on what is, quite simply, the next massive economic shift. We aren't looking at the past here, we're looking at where the puck is going. So let me just ask you directly, when you review your long-term growth models, where exactly are they focused? If you had to confidently name the economic superpowers of the next 50 years, the regions that will completely dominate global financial markets, technology, and manufacturing, where does your mind immediately go?
Right, and this kind of hits the nail on the head regarding the gap between perception and reality. The standard boardroom answers tend to be India, China, or a resurgent tech-driven West. Those are the safe answers. But if we actually dig into the demographic and economic data, they're also the old answers. Right now, there's this quiet but incredibly powerful structural shift happening. The math really points to a single, inevitable conclusion. By the end of this century, some of the most dominant financial and industrial hubs on the planet won't be in Asia or Europe. They will be in Africa. To break this all down clearly, we're splitting this executive briefing into 4 key parts. First, the demographic engine. Second, digital leapfrogging. Third, local green manufacturing. And finally, risk assessment and nuance. Let's get right into it.
Okay, let's dive into this first pillar, the demographic engine.
The foundational engine of literally any long-term economy is its people, right? It's your talent pool and your consumer base. Now, while the developed world faces a pretty severe aging crisis, and historical manufacturing hubs like China are seeing their working age populations actively shrink, Africa is experiencing an unmatched demographic explosion. Check this out. The median age in Europe is over 44. In North America, it's 38. But the median age on the African continent, it is just 19. 19! The implications for future labor forces and consumer spending here are absolutely staggering.
To put that into a broader macro perspective, by the year 2050, the population of Africa is projected to hit 2.5 billion. Think about what that actually means for your global strategies for a second. By 2050, 1 in every 4 people on planet Earth will be African. This means the world's largest, youngest, and most digitally literate workforce is all concentrating in one specific region. So for global companies looking for talent, for rapid innovation, and for entirely new consumer markets, Africa isn't just a potential market to keep an eye on. It is the market you absolutely must prioritize.
All right, moving on to part 2, digital leapfrogging. So having a massive young population is one thing, but how that population interacts with modern infrastructure is what unlocks true economic velocity. Economists use a specific term for what we're witnessing here, and it's called leapfrogging. Basically, this is when a developing region completely skips older, clunky infrastructure entirely to adopt cutting-edge technology directly. Think about Western banking as an example. It took centuries to build brick-and-mortar branches, establish physical ATMs, and wire up legacy credit systems. Well, much of Africa bypassed all of that legacy cost entirely. Thanks to early innovations like M-Pesa in Kenya, mobile money became the absolute standard over a decade ago. They were processing billions in digital transactions way before mobile wallets were even considered mainstream in the US. And that leapfrogging, it's laid the groundwork for today's booming tech ecosystems, what people are increasingly calling the Silicon Savannah. We're talking about major, thriving hubs like Lagos, Cape Town, and Nairobi. And the crucial point here is that we aren't just talking about local, small-scale apps. No way. We're seeing world-class companies emerging here. They're dominating in fintech, AI-driven logistics, and agri-tech. These are heavy-hitting enterprises solving massive, continent-wide scaling problems, which creates highly lucrative opportunities for venture and institutional capital. Which brings us to part 3, local green manufacturing. Look, the entire world right now is engaged in this frantic race to build electric vehicles, expand solar grids, and manufacture high-capacity batteries. But you simply cannot build a green future without the raw materials to physically construct it. Africa holds roughly 30% of the world's remaining mineral reserves. 30%. We're talking about the critical elements required for the whole green revolution. Copper and cobalt, heavily concentrated in the Democratic Republic of Congo and Zambia. Massive lithium deposits in Zimbabwe, alongside vast solar potential across North Africa. The global energy transition fundamentally runs straight through the African continent.
But here is the structural shift that every single board member needs to pay very, very close attention to. Historically, Africa was viewed merely as a supplier of cheap raw goods. Well, actually, scratch that. The script is changing rapidly. African nations are increasingly banning the raw export of these critical minerals. They are drawing a line in the sand and demanding that the processing, the refining, and the manufacturing happen locally. They're shifting from raw material export to high-value industrial production. This is a monumental policy pivot that turns a simple mining investment into a localized, high-value manufacturing opportunity. It's a real game changer.
Now, let's sober up a bit for part 4, risk assessment and nuance. Obviously, as institutional investors, we can't just wear rose-colored glasses and only look at the upside. We have to address the elephant in the room. Is the path forward simple or perfectly smooth? Absolutely not. There are very real, very tangible challenges that must be priced into any investment model. The structural hurdles are significant, for sure. There are massive infrastructure gaps that still need bridging. There's political fragmentation across varying jurisdictions, and historical sovereign debts that create macroeconomic friction. We have to be highly objective about these complexities when navigating the investment landscape. However, what mitigates these fragmentation risks is the structural organization currently underway. We really have to look past the daily headlines and focus on the overarching trend lines. The implementation of the African Continental Free Trade Area, or AfCFTA, is huge. It's actively working to harmonize these jurisdictions, systematically creating the world's largest unified market. It is structurally organizing what was once a highly fragmented landscape into a cohesive, massively scalable economic architecture.
So let's take a step back for a second and look at the grand timeline of global economic dominance. The historical data shows a pretty clear progression. The 19th century was fundamentally shaped by the industrialization of Europe. The 20th century was undisputedly the American century, totally driven by consumerism and technological supremacy. But as we synthesize the data we've just covered, the explosive youth demographics, the digital leapfrogging, the monopolization of green transition minerals, and the unification of its markets, the 21st century is tracking aggressively to be the African century.
Which leaves us with one final, absolutely vital thought to consider as we conclude this explainer. Based on the structural economics we've explored today, the question isn't whether Africa will become a dominant economic superpower. The math kind of tells us that is practically inevitable at this point. The real question for every executive and investor watching is this: are you paying attention, and is your capital actually positioned for the shift? Thanks for joining me today.